Hey guys. Okay. And then now the police want to ride past and make a lot of noise. Hey guys, good morning. I'm a bit early today, but I wanted to come live stream guys and give you guys this heads up regarding partnerships and S Corp. So if you guys have a partnership or an S Corp return, you definitely want to tune in into today's live stream, because if you're watching right now, the title says the IRS is tracking your S Corp and your partnership. So we're going to do a deep dive into what is going on. I came privy to this information while I was preparing all of my partnership and S Corp returns that was due on Friday, March 15th. So if you know somebody that has a partnership or an S Corp tax return, you need to share this video with them, and definitely look out for when my team break out this content so you guys can be well aware as to what's happening. So if you guys are new to me at all, then you probably don't know nothing about me. You don't know that I've been given tax strategies and tax tips for years. You don't know anything. You probably found me off a post or something like that. So for the past maybe 8 or 9 years, I've been live streaming and really, every quarter or every month, I'll come up with a particular topic. If it's any hot topics, I would discuss those hot topics, keep you guys on top of everything. So while the economy was changing and while things were adjusting, I was informing you guys of everything, what was happening behind the scenes, what you guys need to do to prepare for your taxes and for your businesses and so forth. So now we're in 2024 year, and what I'm realizing is that everything that I attempted to prepare you guys for over the past 5 and 6 years is actually in the works now. During the PPP journey, I warned you guys, prepared you guys, gave you all the intricacies, how the fraud will happen if somebody persuades you guys to do it. I've also explained to a lot of you that having an S Corp or partnership may not work for you simply because of multiple reasons. You don't make enough. You've only been in business for 1 year. You haven't even gotten it off the ground yet. Your revenue is not consistent. You don't make enough. So there's a lot of various reasons why many of you should have never converted over to an S Corp. And then some of you guys got into partnerships with individuals, and then now the partnerships aren't really working out, but you guys are trying to figure out things. So right now we have a lot of you that jumped on the bandwagon these past few years and set up these S Corps, right? Okay. So y'all know I'm against y'all just setting up the S Corp without getting personal one-on-one advice, because an S Corp does not necessarily work for everybody or every industry. Okay. But what I found was that a lot of these social media gurus then convinced you guys that, oh, if you have an S Corp, you don't have to pay self-employment taxes and dotty, dotty, dotty. And yes, that's true. You don't have to pay self-employment taxes. However, you do have to be on payroll. However, your business needs to be making enough money to cover the additional cost associated with that S Corp. Okay. So now we're here. I went to go file taxes per usual, y'all. And when I do you guys' taxes, okay, if you guys don't know, I'm an IRS enrolled agent. So I'm licensed to represent any of you guys against the IRS, okay, and your state as well. So if you guys have any tax problems, back taxes, I can definitely help you. So while I was walking through tax returns and uploading them to my clients' portals and things like that, I realized the IRS is watching you guys. The IRS is watching all of the S Corp owners and all of the partnership owners. So remember, guys, we have that beneficial ownership information form, the BOI form that just came out, right? Remember, we just got the BOI form, right? That's one thing. They want to know who owns the partnerships. Now, on top of that, guys, what they're doing now, they're tracking your basis inside of your S Corps and your partnerships. Okay. So, what is a basis? Okay. The basis, in simplest term, is what you've put in to the organization, your business. So, let's say, for example, guys, you contributed $5,000 into your business. Your basis would be $5,000. Let's say you got in a $5,000 cash contribution and then you went and got a loan for $25,000. Then 25,000 plus 5,000 cash is 30,000. So at that point, your basis would be $30,000. Okay. Why is that important? The amount of your basis, the amount that you've invested into your partnership or your S Corp determines the amount of losses you guys are able to take on your personal return. I know this is, and this live stream may be a lot to digest. I hate when I have like hard live streams like this. But guys, this is important because a lot of you are taking massive losses on your S Corps, massive losses on your partnership, and you're only taking distributions on your S Corp, or you're only taking distributions on your partnership and not doing guaranteed payments. Why is this important? A lot of you have set up these S Corps and you're not running payroll and you're just taking distributions from your payroll, from your company. Now, since the IRS is tracking you guys, basically watching you guys on that form that I'm going to show you today, many of you have overstated your losses over these past few years because your basis is not calculated. This is very technical. I just realized it. This is a very technical live stream. So I'm hoping when my team break this live stream down, you guys will be able to catch it. So let me share my screen right now. So when you guys go and file your partnership return or your S Corp return, and guys, if you're watching me on Instagram and you want to see my screen, head over to my YouTube channel, which is Falasha Day TV. Okay. So I'm going to share my screen, guys. When you guys go and file your tax return for your partnership or your S Corp, you're going to get this form, Schedule K1. Here's the K1 for your partnership. And then here's the K1 for your S Corp. Okay. So I'm going to zoom in. On this K1 is then used to file your personal tax return. So once your business, partnership, or S Corp taxes is filed, you're going to get a K1 that now needs to be added to your personal return. If that K1 have a loss, you normally would just take the loss outright. If the K1 have any profit, you would take the profit outright. Now, since the IRS has been trying to get money back, okay, over these past few years since Biden came in office, as I pre-warned you guys and hope that you guys did start doing things correctly, but from what I'm seeing, nobody did. Okay, but when Biden came in office, he made it his mission, guys, that he wanted to get back a lot of the money from the IRS. And this is one way that they're going to get a lot of money back from you guys to the IRS. So let me zoom in and see if I can make this K1 for this S Corp a bit larger. Give me 1 second. Let me see if I can zoom in. Okay, let me see how I look on the screen. Okay, that's much larger. Okay, so you guys see on box 1, it says ordinary business income or loss. You see the loss part in parentheses as well. So if your S Corp had a $30,000 loss right here, right? And your basis was only $10,000, you're only able to take the $10,000 loss. not the full 30,000. But because many of you are not doing things the correct way, you signed up for them S corp returns, you signed up for those S corp and turned your businesses into S corps, and you didn't realize that it's much more complicated than a regular LLC, sole proprietor, and don't realize that you cannot just take those losses outright. So now what the IRS is doing sneakingly, and let me share this other screen, and they wasn't doing this in previous years. This is why I'm bringing it to your attention. I'm the first one, as per usual, to let you guys know what the hell is going on. So in normal years, guys, you would never see this form attached to your personal return. Form 7203, S corporation, shareholder, stock, and debt basis limitation. During previous tax years, guys, this form was never attached to the IRS. It was never sent to the IRS. Are we all on the same page? This basis tracker that is in our software behind the scenes was never sent to the IRS. Now, when we go to file your taxes this year, guess what? This form is automatically on the tax return. And here's the problem. On this form, it shows what your basis is. Stock basis. So remember, guys, when you become a shareholder, you have a stock basis. Then it also have a debt basis. That's here. So if you gotten any loans or anything for the company, and then between the two, it will show what your basis is. And depending on what your basis is, that determines the amount of losses that you're able to take on your personal return. Why am I concerned? The reason why I'm concerned is simply because I believe in my spirit. Here y'all go. Somebody said they ain't like when I say it in my spirit, but from seeing what's happening, okay, and from my professional experience, many of you are taking the full amount of losses in years that you guys was not supposed to. So that means your tax return, your personal tax return, either your refund will be overstated or your amount that you will owe the IRS is understated. Because the amount of losses that should have been used to reduce your income was incorrect. See, guys, when you have losses from your S Corp, your partnerships, and your sole proprietor LLC, those losses directly reduce your W-2 income dollar for dollar, okay? However, those losses are contingent on your basis. So if your basis is $10,000, you're only able to take $10,000 worth of losses this year, not $40,000, not $30,000. And then also another issue I think we're going to have is that a lot of you guys are not doing your bookkeeping. So you don't know what your basis is. And then there's no way for you to tell what your basis is because you don't have your bookkeeping. You haven't been tracking everything that you've invested into your company since the inception. And then also, if you guys did not know this, and I'm going to have my team chop this out when it happens. So right now, in the present time, 2024, as I'm saying this, what's today? March 19th? Today's what? March 18th? Okay, March 18th, 2024. What was I about to say, guys? I got so caught up on the daggone date. Okay, let me just move on, then I'll probably remember. Okay, so basically what I'm realizing is that now, since all of you guys are not doing your proper bookkeeping, right? You have not calculated what you've invested into the company, and you've probably taken losses in 2022. And if you filed your tax return this year for 2023, the losses are overstated. The problem that we're going to have now is that many of you don't know that when your business make a certain amount of money as an S corp or a partnership, let's say, for example, your business make $250,000 and you own a partnership or S corp. You are required to do a balance sheet. So that means you guys need to be doing bookkeeping. Now, with this new tracking, well, the IRS already had this form, but they never used it. Okay. It was never sent to them. Okay. Now, with this new tracking, bookkeeping is going to also be required so you can make sure that your basis is calculated correctly. And honestly, guys, the person that's doing your taxes, they don't have to calculate your basis for you. You're supposed to know what your basis is. Now, some people may charge you extra to calculate your basis to get it right. And then some people may not be knowledgeable enough to even know how to even calculate your basis, because that has something to do with having an accounting background. So if your tax person is not an actual accountant and they're just doing taxes, fly by night, just their extra side hustle, then they don't know accounting principles. So they may not even know how to calculate your shareholder basis, your stock basis in your company, or prepare a balance sheet if necessary. So guys, the IRS is basically watching you guys. And I already been telling you guys all of these past 2 to 3 years while they was making changes, the ways that they're watching you guys. But this is a new way that they're doing it. Okay. Now, what they're doing is, if you guys are just coming in, the IRS is now tracking your basis on your business returns and also on your personal return. The form that was normally used to file your business return was never affixed to your personal return. Now it is. And so many of you may have issues because the IRS may send out a notice requesting your basis, requesting you to amend your return if you only took distributions. So if you guys don't know what distributions are withdrawals from your company that's not being taxed. And you're not supposed to take distributions above your basis, or it's taxable. Okay. So the IRS is trying to figure out a way to get all of their tax money. They're digging into the distributions. They're digging into reasonable compensation. So if you guys have an S corp and you're not doing payroll, they're digging into the reasonable compensation rules. And now they're attaching your 7203 to your actual personal return so they can see whether or not those losses or distributions that you guys are taking is allowed. For all of you guys that's here, do you guys have any questions at all? This was quite a bit of a mouthful for me to try to explain to you guys, and I hope I did a good job. But do you guys understand what I'm saying? If somebody can put 1 in the chat and let me know that you guys understand what I'm saying. And do you guys understand the ramifications behind this? The ramifications behind this is that many of you will probably have to adjust your personal tax return. And so if you've ended up getting a refund, you may have to pay it back. Yes, this is live. You can ask questions on the live stream. Okay, so if you guys got a refund and your basis was calculated incorrectly, then your refund amount will be adjusted and you will owe that money back, plus penalties and interest. If you ended up owing and the basis calculation was incorrect and it reduced what you owed, then guess what's going to happen? The IRS will then adjust your tax return and then add on the additional taxes that you guys will end up owing. So Keisha said, question. So if my basis is 10K, my business made 50K. I can only withdraw from my business 10K. Yes, 10K tax free. Yes, good question, Keisha. 10K tax free. Yes. That 10K don't have to be on a W-2, and that 10K do not have to be subject to capital gains tax. That's a good question. Okay, so guys, do you all understand? So your basis from going forward, if you have not been tracking your business basis and you are an S Corp or a partnership, I advise you guys to go back and recalculate your basis, okay? And if you're unsure as to what I mean by that, just inbox me. Me and my team can possibly help you calculate your basis. So number one, guys, step one, go back and recalculate your basis. Okay. First step, let me retract that. The first step is to pull your S Corp tax return or your partnership tax return to see whether or not you had a large amount of losses. If you did, now and then go back and calculate your basis. So Keisha says, so if I go over the 10K, would that have to be me paying myself? That's kind of a tricky question. So if I go over the 10K, would that have to be me paying myself? Yes, you will either have to do it on W-2 or it will be a taxable distribution, which would then be subject to capital gains tax. So one or the other. And the reason why I'm having this discussion with you guys and I'm bringing this to your attention is because I know you guys have converted these businesses over to S Corps. And number one, no one told you guys that you're supposed to do payroll and set yourself up to be reasonably compensated from your S Corp. So that's a problem number one. And a lot of people told you guys that you could just take distributions from your S Corp. But they've missed a major key part. You cannot take distributions from your S Corp tax-free above your basis. However, a lot of you don't know what your basis is, or you've already taken a large amount of losses above your basis. And so now when you go file this tax return, you have no basis left to take the losses. And the form that the IRS is now attaching to your personal return is how they're going to be able to connect the dots between your distributions, your W-2s, and your basis. So now we have something else to basically worry about. Because I know a lot of you guys have taken a large amount of losses. I know you guys are not paying yourself on W-2. I know you guys probably had somebody that does not an accountant do your taxes, so they've never even tracked your basis. Or you're probably just hearing the word basis now, which is okay. I'd rather for you to learn now than later. Okay, so do you guys have any questions at all? This was a complete mouthful for me. I hope that I was able to explain it to you guys in layman's terms. And I hope you guys fully understand what I am talking about. So let me just give you guys a brief recap. And then you guys, if you have any other questions, any other tax related questions, or any other questions that you guys see me discuss or me and my team post on our social media, you guys can post those questions now. Okay. You don't have to just stay on topic with today. Okay. So let me just do a brief recap. So if you guys have a partnership on S Corp, the IRS is now officially tracking your basis. Your basis determines the amount of losses that you're able to take and the amount of distributions you are able to take without being taxed. Okay. So many of you have set up these S Corps and everybody told you guys just take distributions. They never told you had to run payroll. That's not true. You have to run payroll as an S Corp, okay? The second thing is you guys are supposed to do bookkeeping and track your basis into that business so that now when you go file your tax return, you will have the amount that you can take as losses. So let's say, for example, if you contributed $20,000 into your company and your company have a $20,000 loss, because your basis is $20,000, you could take the $20,000 loss. If your basis was $10,000 because you only contributed $10,000 into the company and your losses was $20,000, then you're only allowed to take $10,000 of those losses. However, I'm noticing that many of you have taken the full amount of losses every year for the past 4 and 5 years, 3 years, 2 years, simply because you don't have your basis calculated. And so now your personal tax return is incorrect. And see, that's what the issue with the partnerships and the S-Corp. It does impact your personal tax return, guys, because you're going to have that K1 that I showed you guys earlier that rolls over to your personal return. And I know many of you is like, oh, Veloci, the IRS already have that information. You don't know what you're talking about. Not true. Here's why. We were never forced to complete your basis. Let me show you. If you guys was to go to your S-Corp, let me see if I can share this. Uh-oh, I'll stop sharing. If you guys, see, many of you don't do taxes, so you don't know what the system requires us to input. There's certain things on your tax return that we have to input, right? However, your basis, all this right here, your partner's capital account, all of this stuff here, we were never forced to complete this, okay? We were never forced. And then honestly, a lot of you probably didn't even have the information. Oh, let me share the other one. Let me show the other K1. And some of you probably wouldn't even have had the information that we needed if we requested it. So now here's the S-Corp one. See, right here. But see, with the S-Corp, you see how now with the S-Corp, you see here, it just says number of shares and then loans. It doesn't say nothing about contributions, your basis, none of that. Now, with this new form, the IRS will know your basis because this form will be coming over to your personal return, which is Form 7203, which shows IRS exactly what your basis is, exactly what the amount of losses you can take based on what's calculated here. Okay? All of the loans that you invested into your company was supposed to be tracked, everything. Any cars you personally put in the business, any assets you personally put in the business was supposed to be tracked. Any distributions that you took out of the company was supposed to be tracked. Okay? So we have something else on our hands to be concerned about because now the IRS is now tracking your basis. Okay? All right, guys. So do you guys have any questions at all? I think this was a mouthful for me. I think I'm going to get off of live stream. Do you guys have any questions before I get off of the live stream? Do you guys have any questions about taxes? Any questions at all? Okay. Any questions? Okay. Look like you guys must be good to go. All right. Look like you guys don't have no questions. Last call. I'll give you guys maybe like 1 minute because you guys might be trying to digest the information or whatever the case may be. And then here's another thing, guys. And this just came to my mind. Remember all of them PPP loans and everything, the EIDL loans, all of those things, all of that should be actually showed on your S-Corps or your partnerships balance sheets. So if you guys are not doing bookkeeping, then your balance sheet is incorrect. And then more than likely, if your balance sheet is incorrect, that means your basis calculation is also incorrect. So now the IRS is watching us in another form or fashion. And remember, I told you guys, they're just patiently accumulating your information. They're patiently accumulating your tax returns so they can compare them. And then now with this 7203, I already know what they're up to. They're trying to go even further now. We thought that they were just looking at single member LLCs that was just sole proprietors and things because they want the 1099s, right? Nope. Now it's the partnerships and S corps that they're also looking at too. So with the sole proprietors, by the IRS knowing all of the income that you made, they're able to match up all of the 1099s from all of your merchants like PayPal, Stripe, Square. If you did Uber, Lyft, all of them are included under that 1099K bracket, right? So that's for more so sole proprietors, but also big companies too, because they use merchants as well. However, they specifically are targeting partnerships and S corps with this form 7203. So if you are a partner of a business or a shareholder of an S corp, then be mindful your shareholder basis needs to be calculated correctly so that you can take the correct amount of losses and make sure that your distributions are not taxed. Okay. Alrighty, guys, I'm out of here. You guys have an amazing day. If you guys have any questions, you can post your questions under this live stream. However, per usual, you guys will see my team break out this video. Okay. So if it's broken out and you don't have the full explanation, come back to the live stream because I'm finding some of you like, oh, well, you didn't explain this thoroughly. Guys, I try to explain everything as much as I possibly can. I can only do it during the live streams. So if my content that I break out seems a bit vague, you have to understand that it's coming from these live streams, okay? When I'm giving you guys the opportunity to ask me questions, when I'm trying to explain everything as thorough and as in detail as I possibly can, okay? However, sometimes what I talk about is too technical. So you guys are not that interested in it, which is fine until, guess what? One of the CNN say what I just said, okay? So now I told you guys this today, March 18th. When a news publication tell you guys next month or 2 months, then you'll probably be interested in digesting this, okay? But I hope not. I hope you guys understand that the IRS is watching you guys. Tighten up things, get your bookkeeping in order, make sure your bases are calculated correctly, and make sure you're not taking losses that you're not eligible to claim in that year, okay? And remember, the losses could accumulate, so, okay? All right, guys, I love you guys so much. I will see you guys tomorrow on my radio show, The Money Zone. I have Dewan Short coming on tomorrow. So tomorrow's just a relax live stream. Today was a bit technical. So be aware the IRS is now officially watching partnerships and corporations. And S corps. Sorry. The IRS is now watching S corps and partnerships, and they're watching your bases. Okay. All right, guys. Love you guys. See you tomorrow, guys.